Hi, this is Mac with PriceActionTradingSystem.com, and this is Wednesday, January the 18th, our chart lesson. And I'm going to do something just slightly different today. I went ahead and put my chart up here with the lines as I had it today, just so you could see what I was looking at. But I really want to talk about two different things today which really correlate, and one of them is trading experience and the other one is trading psychology. And learning to trade and finding a strategy that works is not really that difficult. Trading itself is not what's so hard. It's the trading psychology or the trading, fighting the inner self that is really what's so hard for people to understand. But I want to start, before I go down that road, I want to start with something else. And I've gotten several emails lately from people that write to me and say, hey, I just can't do this. I'm struggling. I continue to lose money or whatever. And one of the first things I always tell traders is until you can consistently make money on a simulator, you're just wasting your time going into the market trading with your real funds. And basically all you're doing is just donating money to people that know how to trade. And I want to explain it this way. You might have all the tools to be a great trader. You might have all the smarts to be a great trader. But until you have the experience, you're still not going to be able to make money. And let me put it to you in a different term that might make sense, just the way that I like to explain it. Assume you're a great athlete, a super athlete. You might be able to run a 4.540 or a 4.240. You might have hands of the softest hands in the world. You can catch a ball thrown to you anywhere. But I could still, or you might be able to have the strongest arm. You might be able to throw the ball 100 yards in the air on the money every time. But it still doesn't mean I could put you in the Super Bowl against seasoned players that have played forever, and you're going to be able to perform very well because you don't have the game experience. You don't have the timing down. You haven't been practicing. You don't know the other players. Imagine trying to, I don't care how good an athlete you are, but imagine having to step in tomorrow and play quarterback in the Super Bowl against a Super Bowl team. The odds are you're not going to do very well. You might have, you might have a couple of great plays, but you're going to have so many mistakes and bad plays that they're going to erase the few good plays that you're going to have. Just because you're a great athlete, you'll probably make a few good plays. That's right. And but overall, your mistakes are going to be they're going to make so many mistakes, and you're going to be so inexperienced that that's going to erase the few good plays you have. And it's the same thing with trading. You're going up against the Super Bowl of traders when you go live. And these guys have been trading the market. They've been watching it every day. I've sat here, I've got thousands of hours of watching price action. So I'm pretty good at reading the price action. And even I still make mistakes. Everybody's going to still make mistakes. But I've got game experience. I've been in there. I watch it every day. I understand pretty much what's going on. I understand what to expect. When something happens, I'm usually not caught off guard. I might get tricked and I might get surprised, but I'm usually not caught off guard because I've got experience. And so until you've got experience in this market, and that doesn't mean trading for 30 days or 2 weeks on the simulator and then going live, because it's going to be a little different when you go live, when your real money's on the line. So what I'm talking about is trading on the simulator every day until you can make money consistently every day. When you can do that, then it's time to go live. Until then, you're just another statistic, and you're just going to be another donator to the people that know what they're doing. And all that's going to happen is your money is going to get transferred out of your account into somebody else's. Sure, you'll have some winning trades, but you're not going to have enough to overcome the mistakes and the errors that you're going to make. So the bottom line of what I'm trying to tell you is I don't care how smart you are. I don't care how good a trader you really have the skills to be. Until you've got that game experience of being in the market for quite some time, you're not ready for the Super Bowl. And that's what trading the mini S&P, you're in the Super Bowl of trading. The best traders trade this market because it's a great trading market with very little slippage. and usually plenty of volume. And the market, not only that, but this market's been more difficult lately because it really hasn't trended well. Now today we had a pretty good trend, as you can see, really from the open. We traded higher. We had this little, you know, pullback here in the evening, or I'm sorry, not in the evening, but during the, late morning, late to mid morning, we had this little hesitation here. But all that is a pullback to the trend line, and then prices took off again, and we're still going higher. We never even broke this trend line today, and that was pretty easy to find if you just drew it off the first few swings down here. If you drew it off these, it was obviously too steep. So if you drew it off these first couple using the closes right down here and use that low right there, then that was perfect for where it came back to each time today. And you can see we had a bounce here. We didn't quite get back here, but if you look, let me show you this right here. If you move that up right there to those previous highs across there and those previous closes that I'm always talking about, that was a perfect pullback and retest of the breakout area. And what was resistance across here earlier was now support. And this resistance is basically left over from yesterday over in this area, as you see. And but you should have actually had your line drawn off these closes first thing this morning, and that would have alerted you to look to exit here or even take a trade right here to the short side. And then once we broke higher and came back and tested this area right up in here, there were your closes then. They moved up just slightly, so you move your bar up a little bit, and we retested that to the tick, and prices reversed and continued higher. And that's the reason we didn't quite get back to the trend line here. And this is also a failed break below an important support area right across here. So a lot of reasons to be looking for long right in there. But anyway, what I'm trying to get across to you is don't be going live until you can consistently make money on the simulator. If you can't make money on the simulator, you're definitely not going to make money trading in a live market, not in the ES. And again, it doesn't mean that you don't have the skills and that you aren't a good trader. It's just you don't have the game experience because there's I don't know what the word is I'm looking for, but there's tendencies, there's idiosyncrasies, there's things that each market does slightly different. So even if you've traded stocks or another market, they're not, and even though price action works in every market, there's still some slight differences and things that you'll learn. I mean, very few breakouts break out and take off in the ES. Now, there's some markets you can trade some of the currencies. When you break out, man, it takes off like a rocket, and it might go 40 ticks before it backs up, or 40 pips before it backs up and retests. And sometimes it may be days before it backs up. But generally, when the ES breaks out, it generally immediately pulls back and tests that breakout area. And until that breakout area reverses, is the way I like to say it, don't be trading in that direction. So you've got this double top up here, you got some strong resistance, so you don't want to be going long up here until this former resistance area acts as support. And there it is right there. It acted as support. The trend's up, the trend line's up, there's been no break. There's where you want to go long. This is a key area. Until we get above it and it acts as support, this is a key resistance area, so you're looking for shorts up here. And you can see you could have shorted anywhere up here on these highs and made money till right here, and no short ever really set up right here. And so that was your clue not to be looking for a short. And even if you'd have waited till it got up here and went short, you probably would have still got a point or so out of it. But there was no reason to be looking for a short up here. There was a reason to be looking for shorts right along here, but after we came off this trend line, that was the clue not to be looking for any more shorts, because the trend is up. And actually, if you clone this line, we probably I didn't do that because I wasn't trading that late in the day, but if you clone that line and drag it up here to the high side, which is somewhere right up in here, I probably would have drawn it right across here. And we never have touched that today. Whether or not we'll touch it later, my guess is we probably will. But sometimes when the market starts to lean over like this and we don't give up there, that's a clue that it's running out of strength, and it's probably it may sell off. But we'll just have to kind of wait and see. You actually might be able to draw this line right across here, and that is kind of a wedge shape, and generally that's a reversal type shape when you see those wedges like that. And we did break above it right there, but you see it couldn't hold it, and we got back inside. And so we'll see what happens. We may sell off here, we may break higher and go higher, and then we may stay on this this trend channel here, but it looks more like a wedge to me at this point. Actually, you probably could have drawn it down here just like that. It really looks like a wedge there. That's generally a reversal type pattern. So there's a good chance we might reverse slower here before this is over. But this is after the close. Here's your close for today, this line right here. So we're in the overnight. It's after 3:30 again, my time, so we're trading over in here. But again, I first talk about experience, and then second is trading psychology. And that's what makes trading hard, is you've got to be able to have a strong mind and be able to force yourself to do what you need to do. If the trend's up in here and you're trying to get long in here near this resistance area, you're making a huge mistake, even probably on a pullback to the EMA. If you'd have bought this pullback to the EMA, it was still good for our scalp, following our rules. And that's why we always scalp out and then go to runners, because in case you're wrong, you still would have made money here buying, scalping out, but your runners would have got stopped out, and it would have been a good thing, because look, prices traded all the way down to here. And but this was your key entry points today were all along this trend line and all along this resistance line up through here. And so make sure you put these lines on there. You saw how I did that. I looked around until I found the lines that fit. And then and it's pretty obviously that line fits right there, and it's pretty obvious this line fits right here. So it doesn't take a rocket scientist to put these lines on there, but sometimes you just have to kind of put them on there and play around with them until you figure it out. If you draw that line right there, it looks pretty close to our channel. That's a little steeper. That's a little less steep right there, but that probably would have been your channel. But you can see it just doesn't really fit today, and usually you draw it when you get it off these first two swings. You'll come back to your last couple of swings, and that would be right there. And you can see it did come into play right here, but we wouldn't have known that because you drew it and you drug it up to these areas, and it really never came into play anymore today. So it doesn't really look right. Let's go down here and draw it like this right here, and you see all of a sudden that looks pretty good right there. So then you got your trend line. So you just have to kind of play around with them. That's how I find them. And generally they're real easy. This was not so easy to find today because it's kind of a wedge looking pattern. And unless you're paying attention and experimenting with your line and drawing it around and redrawing it during the day, you may not have found that. It didn't really matter because all your key entry points were going to be, if you were trying to sell off that, you're counter trend trading anyway, which is not smart. So it doesn't matter if you found that line or not. This is the one that matters, because this is where all the reversals came off of. And we really were still in this range. It was pretty obvious you could buy down here if you just bought this reversal right here at the strong support that's been there for a while. And then you could have sold if you didn't do anything but wait for the resistance and the support, which your resistance, is going to be the high of the overnight. There it is. Could have sold that, and the support is down here, the low of the overnight, which was also the low from yesterday. And so those are obvious points. Just put your lines there and wait till prices get there and watch what happens. And generally you're going to get a reversal. Even if prices are going higher, you can see we still got a reversal here. They tried to reverse this and just couldn't do it. And then we finally, if you just pull the line down rather than drawing you, and you can see we had a failed break lower here that tried to go lower twice and bounced off that trend line both times. That was a great place to go long because that's a short trap off a double bottom and a strong support area, and you can see prices traded higher. So if you just wait for these areas, don't, if you're trying to trade and figure out, if you'd have bought in the middle here, you'd have done okay today until right in here. But, if you start trying to buy in the middle of this stuff or sell in the middle of this stuff, you just get whipsawed. So wait till prices get to these key areas, which in a trend, it's a pullback to the trend line, and if it's a range, it's the selling resistance and buying support, and this was resistance and support until we finally broke through and pulled back and tested it here, And once we tested it here and went higher, then we were good to go. But anyway, going back to psychology, again, I talked about experience. I want to wrap up on the psychology. Um, Force yourself to sit and wait for the key entry points. And you know, if I tell somebody to do something like, just to give you an example, I'm not picking on, I know somebody sent me an email today, but you're not the only one that does that. He says, you know, I'm scared to enter any time in resist congestion now because you say not to enter in congestion. Well, you got to take the big picture into mind. Like, this is congestion. And sure, you don't want to be going long here, but if a short sets up, you want to take the short. And usually, yeah, you need to wait for the traps. And you can see this was not a good setup until we had a trap right here. And the reason this is a trap, let me show you why this is a trap. You had all these bars right here overlapping. There was your high, and prices broke higher and then reversed and then had a big bearish bar. That's a trap because prices broke out of this little overlapping congestion right here. You didn't really get a trap up here. You tried to go higher 1, 2, 3, 4 times and couldn't. But you see, we didn't get much movement down without that trap. It still probably would have been good for a scalp, but you didn't get that trap, so there wasn't as good a movement. Now you got a trap right here, and then look, it was a pretty good move. We even broke through all that support that time and went on down lower and caught this trend line. So look for the traps, and that's basically what this was right here. You kind of had this low right across in this area here. I probably would have had it drawn like that right there, because that was the real support area right there. And you see we broke lower, tested this breakout area right here and reversed and went higher. That's a short trap because prices broke lower. And this is why we don't trade breakouts, because most of them turn into traps. This one turned into a temporary trap, but they couldn't take it any lower, and then boom, we were off to, when I say this one, I'm talking about where we broke out here. But this was a pretty good breakout because we'd been across here all day. There were obviously a lot of stops up here, and when they finally hit them, they worked it higher. But you see, it tried to go higher there, backed up. It got maybe 1 tick higher there, backed up, and then it went and got maybe 1 or 2 ticks. That's 3 tries. It just couldn't go any higher, and then it had a pretty good little sell-off right there. Came back and tested this, set up a short trap, and then it had that trap gives it the momentum, because by this time everybody thinks the move is over, and they're all getting short, and a lot of them get short right here at the very low. And I wouldn't be surprised if some of you drop me an email today and say, hey, I was one of those guys that got short right in there, because that's all they were doing, were sucking you in and tricking you and trapping you, and then they reverse it, and you got to exit, and that's what drives it up. All these traders start exiting, and that's why all of a sudden it would just reverse and shoot straight up. I used to see those moves, and I'd go, why did that happen? But that was when I didn't understand price action. But now that I understand what's going on, I realize that the momentum of all these shorts, the people that are getting short all down through here, and then especially the ones that get short right here, and not only that, not only are there people getting short, but all these longs start exiting down through here. And then all of a sudden it reverses, and they realize they got tricked too. So not only are the shorts covering, the longs are buying back again, and new longs are jumping in, and the smart traders are all getting in, and suddenly you've got a rush of buying that runs it to a new high, just like right there. And there's your breakout above this area right up here, pulled back, tested the EMA, and then it went on higher again. And you can see every time it broke above an important area, it always pulls back, and that's what the market does. It tests support and resistance over and over till it gets through, and then what was resistance has to become support before it'll go higher. And you see down here, they tested this support several times, and they never could break it really. So it holds, and then the market goes higher, and then it's testing resistance till it either gives up and goes back down and tests down here, or it goes higher. And today it went higher. So this market's still going higher. Believe it or not, it's still going higher, and we can't argue with it. And that's trading psychology. Don't argue with the market. Just read, just follow what it's doing and get on board with it. But we're getting close to 20 minutes. I'm going to wrap it up. Hopefully this made sense to you today about making sure you've got plenty of trading experience first, and then the trading psychology of of forcing yourself to do what's right and not making mistakes by waiting and being patient. It's hard to be patient when you hadn't traded for 30 minutes or an hour, but if there's no setup, and usually your setups are all at your key entry points that I'm always talking about, and if you just wait on those key entry points, you may only get 1 or 2 or 3 trades a day, but I guarantee you they're going to be winners 90% of the time if you're reading the price action properly and reading, you actually know exactly where the key entry points are. And they're generally off the pullbacks to the trend lines like here and here and here. And really we only had a couple of them right in here and right in here today. And it's the pullbacks to those places, and it's the bounces off the support down here and resistance here, and then right here. Those are the key entry places. And if you entered at any of those places, you made money today. So anyway, this is a wrap. This is Mac with PriceActionTradingSystems.com, and we will see you next time.